on the damn signal on my phone. So what I am doing right now is not in denial. I am preparing for a housing market downturn. I mean, I'm like actively getting ready to buy rental property if I can. Now, if somebody was in denial of a housing market, would they be preparing for something like that? Like, that's the question that I would have to ask anybody who put a comment out there and said that I was just wishful thinking and just anticipating that my house is going to go up forever or something like that. Like, I don't know what it is that these people were trying to get at. Now, I know that if I want to see a particular direction, I can go out there and I can find all the information that I want that will tell me, yes, I am confirming your bias. Like, I know that I could go out there and find all the reasons and all the people out there who are going to tell me about how there's going to be a housing market crash. Now, if you are in a position in which that you want to take advantage of a housing market crash, you might want to go out there and find all the reasons why there isn't going to be one so that you can have a good informed decision. Now, here's another thing. Like, I asked people in that video, I said, listen, send me an email that gives me all the reasons why the arguments that I had put out in that video were incorrect. And the only email I got was one telling me that I was an a-hole. Like, I don't even understand why I even got the email. I was reading it. I'm like, what's the point of this thing? Right? So when I look out there at the housing market and I think about what it is that would cause housing prices to come down, and I think of pretty much one thing that it's going to take: inventory, lots of it. And that's the major thing that's going to happen, that's going to drop the housing market prices, is going to be a lot of inventory. And so I have put it out there many times. What is it going to take to bring the inventory levels up? And now there has always been these ideas that put out there, like there's going to be a wave of foreclosures due to the ending of the pandemic forbearance period. Didn't happen, right? It's going to be a wave of inventory coming onto the market due to the fact that there's going to be a rise in inventory, or I'm sorry, there's going to be a rise in mortgage rates, right? So the mortgage rates went up 3-4 months ago. We're still not seeing the housing market crash. This could take time, but it hasn't happened yet. So these things that are like everybody has said out there that this is going to happen and then this is going to occur from it, not everything happens the way they say it does. And there's a lot of excuses for why these things occur the way they are. Now, mainly what I see within the housing market is that there's not going to be a huge inventory level rise until you see unemployment rising. Once you see unemployment rising and people are unable to make their house payments, then you might see some wave of foreclosures coming from something like that. But that's not the case at this point. And I'm not trying to deny that that's not going to be the case going into the future. I mean, that's a very real possibility, but I'm not seeing the evidence of that at this time. Right now, there's 3.5 million missing jobs. It's going to take a while before we get to a rise in unemployment, I would assume, from those numbers, right? I mean, and that's not like any numbers that you should trust because they all come from the Federal Reserve. But I mean, you guys kind of get where I'm getting at on that. So again, like when I look out there at the housing market, I have to think, what is it that's going to cause a rise in inventory? Right? And that's really where I don't see the housing market crashing because of it. Like, where's that rise in inventory going to come from? And that's the major question. So I look and think about like the Bloomberg article that I have down there. Let me see. I can't remember the title of it, but it was something about, I think Lennar, the home builder, is selling off 5,000 houses at a huge discount. To who? To institutional buyers who are going to rent those properties out. And all the people who are basically saying that there's going to be a housing market crash and I ain't buying until there is one, where are you going to live? You're going to rent those properties from the institutional buyers. And on top of that, think about the things that everybody is saying about inflation. Inflation is killing them. There's abundance of money rolling all over the place and it's killing them because there's so much money everywhere, right? Listen to Cantillon. I know no better measure than the leases and rents of property owners to judge the abundance and scarcity of money in circulation. When land is leased at high rates, it's a sign that there is plenty of money in the state. But when has to be leased at a much lower rates, it shows, all other things being equal, that money is scarce. What are you seeing happen with rents? Rents continue to, I mean, there is rents that are coming down in a lot of areas. I mean, I've certainly seen, evidence of that, people talking about it. But in my area, it doesn't seem to be. I mean, a single bedroom apartment is almost as much as my house payment on a 4-bedroom house. You know, and people were like, well, what about taxes and insurance? That's including the taxes and insurance. In fact, I think the house payment itself is just a few, like $100 more than the apartment is. The taxes and insurance on top of it adds a few more $100 to it. So this is the same, you know, I mean, you think about it, like I am going to do whatever it takes to stay in that house if I lose my job and everything else that goes on, because renting an apartment isn't something my family and I can handle. It's not big enough. Right? So this is the case for a lot of people. I mean, I want to invest in real estate. I would love, don't get me wrong, I don't want to see people suffer. I want to see blood in the streets when I buy. That's what I want. I want to see a total housing market collapse, and I will buy in when that happens. If I can still earn money from in that during that time, I would love for that little time in history to take place for me so that I could buy into the real estate market. I mean, I'm just being completely honest with it. That's the case, right? I got some super chats up there. I should probably talk about that. All right, where are they? Oops. Okay. Oh, there we go. Hey, Matthew, what's happening? Lumberjack Landlord, thank you for the $20. Throwing the heat. All truth, brother. Well, thank you. And so, you know, and that's just the thing. Like Matthew and I, we're going to get together. I'm going to figure out the steps that I need to take today in order to take advantage of a situation that comes into the future. You can't take advantage of that future situation if you're not prepared for it today. And that's what I'm doing now. Like I'm still trying to get my ducks in a row and trying to get my mindset to it. Right? That's another thing. You got to be mentally prepared for that. Like you can't go into it half-assed and thinking, "Oh man, real estate didn't work out for me." And it was just like, yeah, because you didn't throw it all into it. I mean, you got to be going for it. You think Lumberjack Landlord isn't passionate about what he does? Of course he is. That's why he does so well at it. You know? I don't know why I'm so fired up, man. It's too much coffee. That's what it is. It's not emotions. That's what somebody said the other day. I guess it is emotions, but it's because I drink too much coffee. All right. Lumberjack Landlord, thanks again for the $10, man. Very cool of you. 5,000 homes over 6 states in the U.S. market chums 12,000 homes a day. 5,000 is a fart and a stiff in the wind. Yeah, that's true. It is, but I think it's more of like the condition in which that people are thinking. Like, it's just like nobody wants these homes. That's not true, right? There's institutional investors out there who want these homes. And who do they want to, I mean, they're not thinking into the future that they're not going to make money off of it, right? I mean, why would they buy them? And then I also think it's just like, okay, so there's institutional investors out there who are not only buying these homes, but they're buying them at a discount. And they're not like going out there looking for loans and stuff like that from banks. They're out there buying these things up with cash to try and, put their capital to work. So, if you're trying to compete against these guys, they're getting a discount already just because they're buying in bulk, buying 5,000 houses at a time. So ultimately they're front running any kind of drop in price anyway from a lot of these people. I mean, again, I have to think, what side of the wedge do people really want to be on? And how are you going to be there? If you're sitting around waiting, like you got a 9-to-5 job and you're waiting for something to change, it's not going to change. It's like you have got to change something in your life and do something different with yourself in order to get on the right side of the wedge, because the wedge is only going to grow deeper and harder. It's going to be even more difficult to get a house going into the future. If house prices drop, do you honestly think that they're going to try and sell you these cheap houses at cheaper interest rates, or are they going to increase the interest rates even more? I mean, this is really the case that I have to ask people. It's just like, do you think there's really going to be a situation out there that is going to put people at a better advantage than the rich? I mean, I don't see that happening. I don't know of a system that has ever existed that did that for the people. That did that for the people who were not realizing that there is no way that there is ever going to be a system that helps the poor people become elevated into a higher status. You have to do that on your own. There is nobody out there who's going to do it else. And that's really what it comes down to. Is like, do whatever it is you can to get on the right side of the wedge, to start a business, to do online sales, to start a YouTube channel, to do the things that it takes in order to be more successful than your 9 to 5 job is going to provide, because it ain't going to provide for you. It's just simply not. It'll give you, I mean, it'll get you a roof over your head and something to eat and nothing else. That's it. All right. Let's go. I am sorry, man. There are so many comments up in here. All right. Right on. All nighter. Let's go. Let me go down to the bottom here. Okay. It was cool for you guys to be here. How many we got in here? 216 with 42 likes. I know I'm a little fired up this morning, guys, but 217 of you right now, go and hit that like button. We'll get the algorithm kicking in, and more people will come in, and we'll get more chats going on. Like many smart people say, wait till after the Civil War. If you survive, then buy. Yeah, those unemployed have no choice but to sell their homes. High unemployed is coming soon. Requires a level of obsession to get on the right side of the wedge. It does. And that's, the other thing is just like, it almost takes a mental issue to do it. Like, you almost have to have, like, it's almost sad, but you almost have to take a certain level of abuse. Like a lot of people were just like, I ain't doing it anymore. This is too much. I can't handle the stress, or I can't handle the conditions, or whatever happens from it. They just can't handle that level of stress, and then they end up not being able to continue on. They might have a more, I don't know how to say, less stress-free, or a less stressful life. They're living a more, free, maybe a more conscious life or something like that, where they actually enjoy themselves a little bit more. But, other people have to obsess over stuff to succeed in order to have a direction in their life. I mean, for me, like obsessing over economics and doing these videos and doing Uneducated Economist stuff, I mean, to me, it gave me a direction in my life that, like, was something that, like, when I was drinking, held me back. Like, I was drinking every day and I was not thinking of, doing something good with my life. Once I gave up drinking and found, YouTube and doing all this stuff, like, everything about my life began to change. And to be honest, I don't, like, that's another thing. People were like, well, not everybody can be like a YouTube star or whatever. And I'm like, I don't even feel like a YouTube star. And to be honest with you, I have been so busted my whole life that I feel like I got a lot of ground to make up. I drive a $500 car because I want to do better things in my life than drive cars. Like, if I want to drive a new car, I want to drive like a Lamborghini or something like that, a new Camaro, badass Camaro. I don't want to drive like, a new car. I got a car. I just like, I don't need a new car. I want a car that's badass. Otherwise, I don't even need a car, right? That's the attitude that I have towards things, is like, I don't want to try and, create a life of status or something like that. I'm trying to create a life that, is fulfilling. And that's really like, what I think a lot of people miss out on. And when you obsess over something like this to try and create a higher status, it's not exactly healthy. I mean, you end up like, it's not healthy. I don't think so anyway. Like, anyhow. See right after she is mentioned. Okay. Hey, UE. Gosh, my eyes are burning here. All right. What would you think about making a series teaching economics, and what you think is important and the best resources to look to make educated opinions? All right. So that's actually something that's pretty cool that you bring it up, because I've obviously put in the energy or the vibration out for that thing, because I've talked to a few people now about courses, like doing economic courses, and it's something that I think I probably should start pursuing or setting up. Not only would it give me something to sell you guys, because obviously, like, I'd never tried to sell you on anything except for maybe hoodies or something like that. I don't have anything to sell. Like, all I ever asked is for you guys to watch the videos, and that was it. That's all I figured I really ever needed in my life, because it's been so beneficial to me. I just like, I mean, it feels like when I started doing well on YouTube, it felt like such an abundance coming in. But I really want to do something different with my life. Like, I know working at the lumberyard has done, like, an amazing thing for, providing a stable life for me. But I really feel that I should be moving on to something that's bigger and better. And so if I had something to sell, like a course, well, then, maybe I could have something that I could pursue that's going to be a little bit more geared towards my passion of doing this economics thing, getting out there, writing books, getting on stage, doing speaking engagements, doing the things that I feel that I see inside of my life that is not necessarily standing behind a till ringing up 2x4s, you know what I mean? So yeah, I do think about the economics course, and I don't know if people have any ideas on like what that course should be like, you know, step one, step two, step three. A lot of times I find myself, like a lot of times when I speak with people, like when I'm at bingo, at the bar or whatever, and I'm talking to them about, maybe a certain economic condition, I can see that they glaze over right away. And I realize that like common knowledge amongst people as far as the banking system is pretty much non-existent. And it's difficult to try and like, express an opinion to a lot of people when like as soon as you start talking, they're just like, I don't know what the hell you just said. Um, it's I would like to have a course that people could watch, like say over the course of like maybe 10 videos, hour a piece, that would provide people who had like no clue about economics the ability to at least have a conversation where they could engage with somebody when they're talking about mortgage rates or mortgage-backed securities or Fed funds rate or US treasuries or investments in general, to be able to understand some of the lingos and stuff like that that those conversations would have. I think that would be a fun course for people to be able to go from like completely nothing to having at least a basic understanding of what it is to have a conversation about macroeconomics or something. Anyway, gosh, I'm a babbling today. I had way too much coffee, haven't I? All right. Moving on down to great idea. Yeah, thank you. Of course, your denial because you're a recent buyer, the market going down whether you like it or not. Okay, great comment. That's the one I'm trying to get at. I have bought a house just recently. Even if that house, I hate to say it, like I don't trust Zillow estimates, but if that house was to drop 30% from the Zillow estimate of today since the time I bought it a little over a year ago, even if it just dropped to 30%, I still would not be underwater. Let the market crash. Go for it, right? I am not concerned about my home purchase and buying a home, all right? I am not in denial because of that. I am getting in position that if that does take place, I will take advantage of that and I will be buying rental properties. And Matthew knows that because we've already talked about some of the steps that I need to take in order to do that. And if I'm going to be serious about it, I need to start with step number one, right? So this is the reality of the situation, is that I am providing myself with both possibilities. If the housing market continues to rise, cool, I bought a house, I need to live in something anyway. If it crashes, I'm going to get in position to take advantage of that and be a landlord going into the future. Right. So don't tell me I'm in denial. I'm not. Like, I mean, I can see things clearly because I don't have a position in which that I want it to go. Like, that's really that's the person you really want to find out there. Like, if you're looking to somebody who's going to give you information who is completely like biased towards one particular direction, they're a real estate agent, right? All they do is sell homes and they cannot sell homes right now. Do you think that they're going to tell you about how awesome the housing market is, or are they going to tell you about how horrible it is because they're starving, right? They're losing their jobs. Mortgage people who write mortgages, same thing. Like I mean, if that's the position that they're in, they're probably in pretty bad position. They're not feeling it right now. Housing market in total shambles for them. I mean, it depends on who it is. Like, I think about it, every one of us is in a different boat, right? I mean, I've said this many times, I've used this analogy over and over again. It's like being out there on that river. Every single one of us is out there on the river. The conditions change constantly, right? We're all attempting to do the same thing. We all want to come back to shore alive. Every single one of us is operating our boat differently. Every one of us has a different boat to operate. Not all of us are going to be making the same decisions or doing the same thing. I mean, I'm in a little tiny duck skiff with a high-speed engine. I don't know how I got here, right? But other people are sitting in a big giant yacht. Other people are sitting in a boat that's sinking. Right? I mean, every one of us is in a different position. All right, moving on. I need to start looking at some of these questions. Zillow isn't even realistic because it's a projection. If you look at open sales and sees the red people trying to sell their overpriced home. I totally agree. I don't agree with Zillow estimates at all. I'm just using it as an example because there's really no other quicker way to find the price of a home. I get it, right? All I guess I'm getting at on the price of my home personally in my area, which is like totally like I mean, it's obviously like the gentrification that is happening here is just is incredible. If I didn't have a YouTube channel, if I wasn't the YouTube star, whatever that's supposed to mean, I would be out of here. I would not be in this area. I would be one of the riffraff that was kicked out of here because I'm not, good enough to be on that side of the wedge. If I'm even on that side of the wedge yet, I'm still trying. I'm trying to figure that out. All right. Hey, UE, have you seen any trends between what you see in lumber and the consumer price index? No. Like I don't. And the thing is about the consumer price index is like I don't really follow that number too much. I mean, I follow the direction that it is going, but when it comes to the actual numbers, it's a bummer because after FASB 56, it just really bummed me out that I read that because it was really disheartening to like all the charts and readings and graphs and all that other stuff. Like all that stuff doesn't mean anything to me anymore because they basically openly stated that they are going to lie to us about all those numbers. Right. So it isn't so much about the numbers themselves. If you want to look at them because you need it for stock trading purposes or whatever, that's cool. But it's not so much about the number itself to me. It's the direction that they are going. And so if you're looking like maybe between spreads or something like that, I would understand. But there is to me the disconnect of lumber from everything else was obvious. I mean, I if you look at the lumber industry as deeply as I did, like there was so many people who I was watching put YouTube videos out who were like internet researchers, which is fine. Like I mean, that's how I do all my research, right? Is off the internet. But then I was doing my research by talking to people who worked at the mill, by talking to vendors, by talking to loggers, by talking to truckers, by talking to other, people who work at other lumber yards, right? I mean, I have friends who work at other lumber yards. So, I mean, when it comes to the lumber industry, I don't think there was anybody out there who was as deeply engaged in so many aspects of the lumber industry as I was. And somebody who was actively trying to pursue the information because I needed to put out YouTube videos to do it. So I saw it. Like when lumber was running up to 1700, everybody called me denial, said I was like, only reason why I was saying this is because I was like a lumberyard worker or whatever. I don't know what excuses people were coming up with when I said that when lumber ran up to 1700 per thousand that you were going to see it come back down to normal. And everybody said I was nuts. Like I could not believe some of the comments. A bunch of people unsubscribed when I started saying that kind of stuff. And then what happened? Here we are, 400 per thousand, exactly the way I said it was going to happen because I could feel it happening within the lumber industry. I didn't even have to look at like interest rates or Fed or anything else. I could just see the inventory levels. I could, hear the chatter amongst the people who are working the industry, like boots on the ground people. And so, yeah, it was easy for me. I wish I knew how to make more money at that. Like there was people who made a bunch of money off of my information when I was calling those lumber trades out or that lumber, positions. Man, I'm fired up today. Simon needs to buy my stuffed ticker banner like George. Oh, what is that? I don't even know what that is. Sorry, all nighter. Hey, UE, been following you for a while, for a year now, and I've gotten a ton from your channel. I own a food cart in Southeast Portland. Hey, right on. Would love to treat your family to a meal if you're ever making your way into town. Oh yeah, you bet. Send me an email on where your food cart is, because actually I might be going to Portland, I don't know, next week or the week after. Oh, maybe not the week after, but yeah, I'll be going up there soon. So send me an email on where your food cart is located, uneducatedeconomist@gmail.com. Hey, Scratchy, what does that say? Zero housing inventory in my neck of the woods. Can't see a crash coming myself. Right on. I am going here. How do I get Scratchy's name up? Get up. Sorry, guys, give me a second here. How come I cannot? Well, that's weird. I wanted to make Scratchy a moderator because he is my bud, but I can't seem to get his name up. Sorry, bro. I'll have to figure that out another time. Anyway, yeah, and that's what I was looking at today. at least in my area as well. I wanted to see like how much inventory has risen since I bought my house, and it's actually quite a bit. There was like, I don't know, at least double the amount of houses that were for sale when I bought this one. And so I don't know, it was like in my, I mean, I'm talking about the little area that I was looking at houses in. There was probably about double the amount of houses. And so I don't know, it was like, I think there was like 7 houses for sale when I was looking, and now I think there's 12, 12 to 14, somewhere in there, that were like in that, like I said, in that little area that I was looking at. So yeah, it's starting to rise, in my area, but not much. You eat a Taco Bell? No, I did not. Taco Bell. All right, red states are markets. Red states real estate markets are still bustling. Yeah, no housing inventory here in Vancouver, BC. Real estate has hit support. What? Okay, nothing on my end but banhammers. All right, I can't wait for assets to keep falling, looking to pick up some things on sale. Yeah, I would too. It's all right. Already multitasking. Let me see if I can try it again. Weird. All right. How do you feel about oil as an investment? I don't know. Like, I don't know about oil as an investment. Like, I mean, to me, to me, like, I wouldn't get necessarily into a commodity itself as an investment. I mean, if you want to get into oil and you think of as oil as your like positions that you want to go towards, I would go towards like companies like, companies that process oil or distribute oil or pump oil or drill for oil or do something like that. As far as like the commodity itself or taking in a position inside of that, I don't know. I mean, I I try to be speculative, in a lot of things that like Bitcoin or silver or something like that. But trying to be speculative in oil futures kind of thing. I mean, I'm not the trader to ask on that kind of thing. I honestly think that oil is going to go up in price at some point. Like you're going to find it go into an all-time high, but not anytime real soon because the demand for oil is going to drop as the recession kicks in and the economic activity slows down. I mean, it's something that I actually had talked about quite a bit because people were like, "Oh, what do you think about the oil prices going into inflation?" And I said, well, the initial impact of oil going into the prices are certainly going to cause an inflationary scenario within that. But then the prices moving up are going to cause less economic activity. And if there's less economic activity, then there's less people driving and participating and moving and doing or whatever, right? And that means less energy being spent, less need for the oil, and then therefore the oil prices would start to fall, right? So it's just the cause and effects, right? From one you get another. Everything shifts and sways. Did I get another super chat? Yeah, I did right there. Anthony Zappin? Hey, thank you very much for the $5. Sell a course on your research methods, e.g., where you look for information, how you analyze it. Tech industry is going to collapse before housing market. Huh, that's interesting. Okay. I should take some notes. Do I have a pen? I should write these things down so I know which, so I remember them. A course on how to study? Huh. All right. Because that's really what it comes down to is each and every single one of us really has to figure this out for ourselves. Like if you follow any one person in their economic theory, then how do you know that's going to work out for you? Like, they say they follow this particular thing and they're convinced about it or whatever. That might work out for them and maybe even a handful of people who are like them. I mean, I guess like if you can relate to that and you want to condition yourselves to be in that position, then you can do, whatever it is that they're doing. But most people can't do that. Most people have to live the life that they're living and they have to figure it out for themselves. And that's where the difficult part comes in. I mean, that's what this whole channel is about, is to try and figure that part out for yourselves. What were we talking about? Housing market, right? Why is there going to be a housing market crash again? Where's the inventory level coming from? All right, BlackRock algorithm is pretty impressive. The massive analytics that it undertakes to generate the offers alone. Too bad more individual investors didn't build it first. Yeah, that's an interesting thought. Yo, Simon, Tony Lopes here. Hey, right on. Hey, Tony. Dirty Boots Capital. We had a video. Tony and I did a video together just a couple of days ago. You should go check it out. It was a really good one. Sorry I'm late to jump in. Did you mention Lennar? Yeah, we were just talking about that, Tony. Selling 5,000 homes to investors. That's a significant indicator. Hey, Tony. And Matthew, lumberjack landlord, you two should get together. You guys are very like-minded people. In fact, if you haven't already communicated with each other, let me know and I'll get you guys' email swapped over. But you guys, I think you guys would hook up really well. But yeah, I did. We did talk about that, and we talked a little bit about what the cause and effects from something like that is. I mean, I immediately what I thought of is just like, hey, I'm a buyer. Like, I'm a buyer of a house, and I want to buy that particular house, and I'm thinking, man, the price is high, whatever. I'm tired of not having a house. And then these guys come in, and they get it for a discount because they bought a bulk. So they pretty much front running any kind of discount that would ever happen. Because if you're sitting there waiting and it's like, oh man, they're going to drop the price because they're looking to sell, and then all of a sudden these guys come in and it's like they swoop it all up at a discount because they bought so many of them. It's kind of like buying it out from underneath you before you get a chance to. And then what do? They rent it out to you for a high price. Just stacking as much silver as possible. Well, I mean, there is nothing I can say to disagree with that. The only thing I would say is the reasonings that is behind the stacking of silver. Like, a lot of people want me to, talk about how silver is going to go to $500 an ounce or something like that. I'm not going to do it. It's not in me to think that silver is going to $500 an ounce, and I don't even care about the idea of it going to $500 an ounce. What I care about is how many ounces I have. Like, that's it. It's how many ounces I have. And when it comes to like silver and the possession and holding and the insurance policy that comes with it, if you think about it as an investment, it gets very difficult to try and make money off of this stuff because you end up buying it at a higher premium and selling it at a discount to spot, and finding a network of people and stuff to try and profit off of silver is very hard. I mean, for some people it could be simple, like it's really easy for them. You have to be on the right side of it, and, a coin dealer, for example. But if you are going to like hold silver, to me it's more about the insurance policy. And I love the story that I use when it comes to silver, talking about when I had a broken down vehicle and I needed to get to work and I had no way of getting to work. And so I called my buddy up who had a Tahoe for sale, and I'm like, hey bro, are you willing to sell me that Tahoe for silver? And he says, yeah, you know it. And I said, okay man, well, you bring it up to me. And he says, yeah, I'll be up there in a little bit. He comes up with the Tahoe, the title. I hand him 165 ounces. He signs the title over to me. And I thought, man, that is so cool. I will always have a stack of silver for emergency purposes just like that. And of course, you have to know people who in a network, you have to build your network up of people who have silver, have things that, maybe skills or items that you want silver. Like there's a network of people out there that, and you'd be amazed once you start going out there and you start communicating with people about it, you'll realize there's a lot of people out there who buy silver and have silver on hand. And that's another reason why I just don't see like the $500 an ounce, because it gets up to $100 an ounce and you'd be amazed on how many people start busting out their silver to get rid of it. So to me, it's all about like the insurance security issue of it. Did I get another super chat there? Man, so many of you up in here. All right. Composite Operator, thank you so much for the 25. Pen, where's that from? Let's see here. I do not remember who said it, but someone made a good point about the coming tech crash. The tech sector, non-productive, has used cheap debt to steal workers from productive companies, Uber stealing engineers from BP, etc. Now, Thank you for that comment, because that is something that I have said for quite a while ago, that these zombie corporations that are out there, and it doesn't even necessarily need to be a zombie corporation, it just needs to be a worthless corporation, in my opinion. Now, these corporations, they gorge on incredibly cheap debt. They use this incredibly cheap debt to expand their companies and take away from the viable companies out there. They take the best talent, the best resources, all the good stuff that the economy could be using to actually have a good viable business. The debt zombies are taking, right? So at some point that will fail, and you're going to find that a lot of these good engineers and people like, who was it, composite operator was saying, these people are going to find their way back over to the good companies, the real ones, and then those companies can actually be better companies. So that's horrible. All right, let's see here. Easy just turned 57. Gold is insurance, silver is speculation. Whatever. I mean, I don't mean whatever, like, yeah, whatever, like, I don't agree. I mean, it's just, I do agree in the sense that precious metals are the insurance policy if that's the way you perceive it. That's up to you. Like, if it's speculation and what, buy low, sell high. That's some, speculation. But when you're buying and holding silver, because not because of the price or where it goes or anything else, but in case of an emergency, that's not a speculation. That's not a speculation at all. Just in fact, I like silver staying down, and I like the idea of it staying down. When you have silver, the longer it stays down, the less downside risk it has, the better it is. Like, everything else goes up, but silver stays still. Notice everything is starting to crash. Silver goes up. Assets are coming down, but yet silver is ticking up. Isn't that interesting? Like, it's the one thing that seems to be maintaining itself through all this stuff. It didn't really do anything at all. My end goal is to build up assets and rentals so that I can help my community. I grew up poor as hell and made it time to pay back. Well, good for you, Jeremy. And then, with that sort of mindset, you're probably going to do quite well. That's the other thing. It's like, I don't want to be in the mindset of, like, I want to pursue as much money as possible. Like, when you do that, it turns into this want, right? This want, this need, this negative energy that comes from that. And you once you start chasing, it's like, if you guys had watched the video with Owen Benjamin, he talked about this exact thing. It's like, the more you want money, the harder you chase it, the harder it seems to get to try and get a hold of. And so I don't want to be like the person who is just like after, like, just tons of money, but I do have to eat, and I do have to live, and I do want to grow, and I do want, the finer things in life. So the pursuing of money is something that I do want to do, but it's the pursuing of the passion of what it is that I'm doing that is going to make the money. That's the most important part to me. And it's not the money itself, like, you know, but giving back to the community, that's a worthy goal. Like, that's a good passion to have behind it, because, like, if you're just going for the money, and it's just like, it probably wouldn't work. But if you're going for the money so that you can help somebody, help your community be a better place to live, so that you can enjoy the place that you live, I mean, what better worthy goal than that? All right, Anthony, thank you for the $10. Major law firms are conducting massive layoffs right now, particularly tech firms. Key indicator that corporate deals are drying up fast, and corporate budgets, i.e. litigation, are being slashed. Yeah, I mean, I'm anticipating that we are going to see some massive, massive layoffs going into the future. A lot of them. I mean, think about it. The Federal Reserve stated in their Jerome Powell and stated about the monetary policy and the future projections of what they are anticipating. There's 3.5 million missing people from the jobs market right now. Very doubtful that we're going to find 3.5 million missing people to come back to the jobs market. It is possible. I'm not saying that they won't just, like, jump back into the game if they, at any given time. I doubt it, though. It just doesn't seem that they're going to happen. And so you got to get rid of the jobs. You got to have to have a lot of layoffs. And that's why, we're probably going to have a continued increasing interest rates that are going to put a burden on all these corporations out there who have gorged themselves on incredibly cheap debt over the last few years. They're going to feel the pain from all this, and they're going to go under. All right. Never tell anyone anything about precious metals. When the USD collapses, that's when silver pays off. Uh, hey, Rain Rabbit, how you doing? Rain Rabbit's so cool. We met in person over at the Fort George Brewery. The zombies. All right, $100 an ounce. Yeah, I'd be selling off mine. Yeah, I'm selling off some of AG. Yeah, I would be too. Zombie workers. You know, I mean, you think about it. There's zombie people out there. How many people you know that they live like paycheck to, they have all the stuff. They got the truck, they got the vacation, they got the house, they got the toys, they got all the stuff. They live paycheck to paycheck. They're pulling their hair out every month trying to figure out how they're going to pay their bills. That's, I mean, they don't look like a zombie. They're running around pretty active, but that's a zombie right there. The moment that they slip a little bit, it's over. It's done, right? They're just basically the Walking Dead at that point. You know, somebody who has very little debt, has high savings, has, a lot more money at the end of the month because they drive $500 car than, and getting ready to buy into assets so that they can provide a better life for their family. That's not a zombie. Like, I don't feel anywhere remotely like I'm like looking to take advantage of zombies. I'm sorry. God, I hate saying it like that. Uh, what does that say there? Bazon? Bazon? Hi, UE. Thank you for the super chat, by the way. What is that, €5? Appreciate that. Hi, UE. Could you tell your thoughts on what would happen in 2020 lockdowns if the 2022 lockdowns didn't happen? You have stated last live stream that it was crumbling. Yeah. Well, okay. It's hard. It's okay. So you have to think about the condition of the environment and what would have been the case if that was to have continued. Now, I was hyper focused in on lumber at the time, and if you go back and you look at the videos that I was doing towards the end of 2019, I was jumping up and down talking about how the lumber inventory levels were falling dramatically, on how there was mills across British Columbia pretty much going out of business. Mills here in the United States were shutting down production. There was an obvious shutdown of the lumber industry. It was taking place. And so we have to wonder what was happening right then that was causing that little situation to go on. And, you think about like debt cycles that are happening. Like you can only have, it's, everything works in a cyclical form, right? So if things are like peaking out, then you know that at some point they're going to churn. Like, when oil hits $150 a barrel, well, at some point that's going to turn, and when it does, it's going to drop down dramatically. Everything has a cycle to it. And so at the end of 2019, in my opinion, we were coming to the end of a cycle when it comes to the everything. Like we were running into a recession. It was 12 years of expansion that was happening, and you can see how it was like fizzling out towards the end. Everybody knew it. Everybody could feel that the downturn in all economic activity, the money velocity was coming to an end. There was going to be a huge crash that happened, and all of a sudden, boom, we locked down. Right? Now, I can't explain what was going to happen because it didn't happen. Like, I don't know how the people were going to react. I don't know what the governments were going to do. I don't know what it was going to be like, because what we got was the pandemic, right? And so when the Federal Reserve, who had no way of bailing out anybody, right? Like, how do you, like, we had interest rates already dropped at that point, okay? So they were really low, and we were going into an economic slowdown. What in the world was the Federal Reserve going to use in order for an excuse to bail out the country, to bail out the people, the corporations, all the stuff? What excuse could they have possibly come up with? I couldn't think of anything. Like, I didn't know what it would be that the Federal Reserve could use to try and stimulate the economy with it. Like, if you have a housing market crash, then that's one thing, right? You got a housing market crash, you got to bail it out, right? I mean, it was too big to fail, right? So like they had to bail it out. But when you have an economic slowdown that was taking place naturally, because that's the way the economy works, is through recessions and depressions and then expansions and all that, Well, you go into a massive expansion of 12 years, then you know that the recession, the depression that comes from that, because it's cyclical, is going to be deep and heavy. Well, they completely covered it up. They told everybody to go home. Don't get laid off. No, no, you don't want to get laid off. Don't lose your job. Don't lose your business. Don't lose any of that stuff. Everybody go home, and here's a bunch of money, and we'll cover up this recession that's taken place. Now, think about it. Go back and look at every single Federal Reserve chart that they put up there. There's a thin little gray line that happens in 2020. That thin little gray line, that's a recession. It's the shortest one in history. Right? So the Federal Reserve knew it. There was a massive, massive issue that was coming. But they had to deal with the pandemic instead. Right? They bailed out all the corporations through special purpose vehicles. Okay? There is no way in the world, there is no law that gave the Federal Reserve any legal authority to buy corporate debt, period. They cannot do it. In fact, the Federal Reserve can't even go right to the Treasury and buy treasuries. That's illegal. They have to buy treasuries from the secondary market. They buy it from the primary dealers. So whatever the Federal Reserve is buying has already been purchased out there by the free market, whatever that is, right? So now we think about this. When it came to those special purpose vehicles, everybody got bailed out. PPP loans, all that stuff, right? But there was one particular one that I hyper-focused in on, right? That special purpose vehicle for the corporate debt lending facility. Because when that thing came out, to be honest, the whole mess came down to that, bailing out the corporations. So the special purpose vehicle, this is really difficult for a lot of people to understand. I'm going to try and explain this for if you have no idea about what a treasury is, okay? This special purpose vehicle that was set up during the pandemic was the key to everything when it came to bailing out corporations, so that this whole time right now, the viable corporations are sitting on a bunch of cash waiting for a downturn so that they can continue to make their payments as people are no longer consuming, right? Everybody knows this. All the higher elites, all the corporations, all those people who are, in the know, they all know this stuff, right? And I don't know how it is that I understood it, because I don't study anything except for what the Federal Reserve does and says, right? And I read some articles about it. So anyway, back to these special purpose vehicles. The Federal Reserve and the Treasury, they set up these special purpose vehicles during the pandemic. There was 13 different lending facilities. They covered every corner of the financial market. Now, what they did is the Treasury basically, in conjunction with the Federal Reserve, took $75 billion and leveraged it up to hundreds of billions of dollars and funded these special purpose vehicles. These special purpose vehicles are entities that are separated from the Treasury and the Federal Reserve. The Federal Reserve itself cannot buy corporate debt. It's not in their charter to have this stuff. But the special purpose vehicle can, because it's an entity that's separated from the Federal Reserve. Those special purpose vehicles are only available during unusual and exigent circumstances, and that's the whole point of the pandemic when it came to these special purpose vehicles, is that they would not have the tool had they not had the unusual and exigent circumstance. So the pandemic, if it did not take place, then that special purpose vehicle would not have been one of the tools that they could have used, and corporations all over the place would have failed. Now, what happened is that special purpose vehicle was established. Then there was a mass media attention brought to it, massive media attention. And everybody was screaming about how the Federal Reserve was going to be picking the winners and losers. And the Federal Reserve came out and said that they were only going to be buying the fallen angels, right? Those corporations who, again, were too big to fail or whatever. Now, this was the threat that was put out there. Everybody talked about it. Everybody was screaming about it. Everybody says, hey, man, the Federal Reserve is picking the winners and losers. And they even came out and admitted that's what they were going to do. Then they actually bought a little bit of corporate debt. They bought some ETFs, right? Some exchange traded funds. These are funds that buy up a bunch of different corporations' debt. And then the Federal Reserve, through the special purpose vehicle, purchased some of these ETFs, which then technically, yes, they did buy some corporate debt. But the narrative is that they were diving in head first. And so now when everybody else out there, all the investors heard this, they started front running the Federal Reserve by buying into the corporate debt, and it started driving the yields down on corporate debt, driving the prices up. And so the people who were getting into this kept seeing the prices rise, and corporate debt was the name of the game. Everybody wanted to be in it. And these corporations started gorging. Oh yeah, give me that money. Here's the debt. Go ahead, buy it up. So all this corporate debt was sold during the pandemic as everybody was assuming that the Federal Reserve was going to be buying it up using the special purpose vehicle. At the end of it, the Federal Reserve says, holy crap, we didn't really have to buy any, did we? And they didn't. They hardly bought any corporate debt at all. They unwound that special purpose vehicle. It's no longer part of their tools. It's gone. But yet the corporations got the cash. Pretty interesting little story, isn't it? How many people tell that? How many people talk about that particular thing? You know, why most people don't is because they were screaming on their YouTube channel about how the Federal Reserve was buying out corporate debt, and they were wrong. That's the reason why. I don't mean to point it out, but that's the truth of the matter. I did the research. I did a video on every single one of those special purpose vehicles. Yeah, all 13 lending facilities. I did another video on each one of those. They were boring videos. They hardly got any attention at all, right? But if you read and understand what the Federal Reserve is doing and you understand their methods, then you kind of get a feel for their strategy. That's why I don't fall for the Fed doesn't know what they're doing. They definitely know what they are doing. Everything that is going on is not outside of what they thought was going to happen. Their words that they use, the narrative that they put out there, those are credible threats. That's meant to guide the market in a particular direction. And it totally works. Everything that they do is working. All right. What does this say? Liquid Electrum's coin collectorum? I'm sorry, I'm getting a glare off the screen here. I can hardly see it. You are a smooth character. Thanks. Well, I appreciate that, man. It's funny because I don't come out here trying to convince anybody or sell anybody on anything. I just come out here and give my opinions. And I got out of politics a long time ago just for this exact purpose, so that I could focus in on the money, so I could focus in on the flow of money. And I do take in a lot of articles and opinions and stuff like that, but everything that I say, this is me. This is what I truly believe, and I don't have to try and make up something. As far as what it is that I think is the appropriate answer, I'm going to give you the answers that I know are right to me. It may not be right or wrong. I don't know. That's time will tell, but I'm not going to fake it for you guys, because that's not what I do. Wow, look at all these comments. My goodness. 442 of you up in here. Go and hit that like button, people. Let's see if we can get it up to 400. I would love to see YouTube take this video and just spread it all over. I told my wife I was going to be out here for an hour. I don't know, maybe I'll try and go a little bit longer if I can. All right. See, where there a question at? Is there any question? Even when I walk around town, you can see it's all older people. There are no younger people hardly. Yeah, I said the same thing a long time ago, but then again, I'm in a community that's really becoming a more older community. We have more of a hospital district. It's kind of like a retirement community, or getting that way. All right. And every day that went by, my suspicions were exponentially solidified. 3.5 trillion missing from recent Pentagon audit. I can give you 911 reasons to worry about that. Yeah. Just keep printing money, especially redistribution of wealth policies. Want a secure job that will never go away? Become a wastewater treatment plant operator. The supply of new young people is crashing every market. Check in from Oklahoma. I am so stoked to catch it live. I love your channel. Well, thank you very much. What is that, Lisa? I really appreciate you coming and checking us out today. Hey, UE, can you give a brief description of the lumber timeline since COVID? Also, check out Nail 3 times Levered Lumber ETF. You might like it. Huh. Interesting. See, I'm not an investor. I don't go and look at this stuff like as far as like what it is to invest or buy investments and stuff like that. That's not like really what I do. But as far as the timeline for lumber and even like, are you talking like, okay, so it really, if you want to know what really happened to lumber, you have to take it back to about 2017 or so, and there is so much that went into it. This is the reason why it's just like I loved have following the lumber story prior to the lumber run up. Like that was like one of the greatest gifts to my channel. It was almost like God sent. But anyway, um, prior to 2018, okay, 2017, lumber was running around 400 per thousand. It started running up to 5, 6, 8, or 650 per thousand in 2018, right? And now that was the critical point because in 2018, at 650 per thousand, the mills up in Canada were pumping out an incredible amount of lumber. They were going through what was called salvage mode because of a beetle infestation that had happened up there and it killed off a lot of their forests. So they had to cut these trees and mill them up or lose them, right? So they started milling out a lot of this lumber and pumping it down to the United States. And again, that was at like 650 per thousand. So after that, shortly after that, there was a crash inside of the lumber prices. Lumber prices went from 650 per thousand down to like, man, it was horrible. It was down into like the 300s, I think, by the end of 2018, going into early 2019. And that crashing of prices destroyed a lot of these lumber mills. So you got to imagine during the expansion, 650 per thousand, it was like 1 year it was 400, and then it gets into 500, and then it's 550, 650. At that time, through 2018, there was a lot of demand for it. These mills were expanding, pumping out a lot of lumber, and then we had a crash in the prices. Right? All of a sudden, there was the salvage mode up in the British Columbia had come to an end, and what had happened is that they had took the stumpage fees, which is the input cost going to the mills. So the stumpage fees is when the loggers cut the tree; it's how much they have to pay the government for doing that cutting down that tree. That in turn becomes an input cost going to the mills. At 650 per thousand, that's what the government judges that from. Well, all of a sudden the prices drop and the salvage mode comes to an end with the stumpage fees increasing at that exact same time. So all of a sudden, these mills have a lesser price coming in from the futures. At the same time, the stumpage fees are kicking up and the input costs are increasing, and it starts shutting these mills down. So all throughout 2019, there's low prices in lumber, and the mills are shutting down like mad all over British Columbia, and even here in the United States, there was an issue with it. So as I'm reporting on that throughout 2019, talking about how these mills are shutting down and how there's an inventory depletion all the way up until about 2000, end of 2019, when we started really reporting on things like the OSB market, the oriented strand board, the 4x8 sheets that is used for sheathing a house. So you got like the skeleton of the house, the 2x4s, 2x6s, and then the sheathing is like the skin that goes on. OSB is the cheaper version of that stuff, and there was mills talking about how they were pulling like billions of square feet off the market. And that was right towards the end of 2019. So when 2020 hit and the pandemic kicked in, there was already like a very limited supply of inventory on the market at that point, with the prices having come down dramatically. At that same time, the pandemic kicked in and shut the mills down even more depletion, even lesser future prices, right? The futures were coming down because nobody thought anybody was going to be buying any lumber, and that depleted inventory even more. And boom, we get hit with the stimulus check, and everybody takes those stimulus checks and runs down to the lumber yard because they're going to build a fence to block out the neighbor. They want a new deck because they're staying at home and they don't want to hang out inside but outside, and they want to enjoy the experience outside. So they're building new decks and fences and gazebos and raised garden beds and remodeling the house for at home work, and rebuilding the garage to live out in there or whatever. All this remodel and demand for lumber started kicking in, and it zapped the inventory levels. Gone, right? So now there is no more inventory from the fact that the mills weren't producing ahead of time. Then they shut down for COVID, and everybody went down to the lumber yard and zapped all the inventory. Boom, there goes the prices, right? Supply and demand. Now, the reason why the prices shot up as high as they did is not because there was some greedy assholes out there trying to make the best money they can out of the mills or whatever. It's because there is an inelastic demand when it comes to lumber purchases. There are people out there who have signed contracts who have to purchase that lumber regardless. They have no other choice. It doesn't matter what the price is. They need that product. $80 a sheet, it doesn't matter at that point. Either they buy it or they fail. And so they were buying it at any price so that they could continue on with their projects. And that's what drove the prices to the all-time highs of what they were, is that inelastic demand. If everybody could just sat back and said, oh no, we'll wait till you guys build, produce more. But that didn't happen because you couldn't have this this elastic demand where people could say yes or no. It was an inelastic demand where everybody was just like, I have no other choice. Where is it? That's the difference, right? That's the reason why lumber shot up to 1,700 per thousand was that inelastic demand and the lack of inventory. And so, yeah, it was no surprise to me when we saw the crashing of prices go from 1,700 down to 400, and then from 400 to 1,200 or whatever it did, and then back down here at 400. This time around, there's a little bit of difference because the demand has dropped off dramatically. The home builders are not interested. There's not a whole lot of people out there looking to build homes. And as far as decks and fences and gazebos and raised beds and remodels of houses and stuff, going into recession does not exactly, put a lot of, excitement into those type of projects as well. So I would assume that the lumber prices are probably going to remain low going into the foreseeable future. But at the same time, and I'm going to get Keta on again, who is from Madison's Lumber Report. Right now, I am getting reports from all over the place of mill curtailments. They are not producing at 400 per thousand. They do not want this price. They want prices much higher than this. And if there's no demand for it, then they're not going to be eager to produce. And that's what we're experiencing right now. At some point, there's going to be a diminishing of inventory, and there is going to be a demand for building of homes. Like, I don't care what anybody says about anything out there. There is people who want to live in a house, and they are not going to not live in a house, right? I mean, that's just all there is to it. And so a home is going to get built anytime in history. There has never not been a time when homes simply were not being built at all, period. There will be people who are building homes, and when the demand starts to pick up for that, there's going to be a lack of inventory, and you're going to see the prices shoot up again. How far out, how much, when I don't know. Like, all that stuff I don't know yet. But come February, we'll know a little bit more because Keta's going to be back on. And I love talking to Keta about the lumber stuff, Right on. So many super chats. I'm missing them. All right. Anthony, $5. Thank you so much. Harvard economist Brock Frieden is predicting that tech layoffs will be beneficial to American workers because foreign H-1B workers will be cut first. I don't know. I have to think about that, like the cause and effects of that. I don't know if that's really going to be. I don't know. I have to talk about the economic impact or something like that. Holy moly, look at all these chats. All right. Nate B for the $5. Thank you so much. I have a potential investment property in southern Connecticut that I could cash flow $1,000 per month on with a $4,000 investment, even at 6.5 rate. Thoughts? So you're saying in less than 4 years you can have all your money back on that investment? I mean, that's, to me, seems like it's a pretty good deal, but I'm no like financial advisor or anything. But yeah, that to me seems like it's a pretty good deal. I don't know, like how much effort do you have to continue into it, I guess. All right, Lisa Clark, $9.99. Thank you so much. All right, what is that? Arturo, $4.99. Thank you so much. Great and educational info. I hope your channel grows. Thanks. Well, I appreciate it, man. Like I'm trying here. I'm trying to get out the, get out the information, figure out how it is that I'm going to grow this channel. Like, I realized that I kind of had this channel gone stagnant. You know, I'm just putting out videos and I'm not really doing anything like to try and expand me as the uneducated economist and what it is that I could do for, you know, for this brand or whatever it is I got to do. And I'm thinking the course, I'm thinking the book, and I'm thinking speaking engagements. And I think the course might be the way to go, because that's really like what a lot of people are asking for, is for like a 10 video course on how to understand the economy and the different aspects of it. And so really, I'm thinking that's probably the direction I really want to head with it. Did I get another super chat down there? I did. Thank you so much. What is that, William, for the $9.99? I agree on that. I work in tech and I have been laid off despite being promoted. I am fortunate to be a U.S. citizen, and that affords me time. People in H-1B need a job in 60 days or they are out. Wow, that's a bummer. Well, guys, you know what? My family just showed up and we're going to go and hang out for a little bit. I would love to stay and keep chatting with you guys, but I said I was going to hang out for an hour with you, and it's been a little over an hour. You guys are so awesome. Thank you very much for hanging out. Oh, Rick Morrow, you just hit me with a $200 super chat. Oh my gosh. Take the family out and have a great time. Thank you for your insights, efforts. Happy holidays. Bro, that is way cool of you, man. Thank you so much. Let's talk later. I gotta go. I'm gonna go hang out with my family. I really appreciate it. This has been a really fun chat for me. I've been pretty excited about it, and I kind of rambled on a lot of things, but you guys are the best, and I really appreciate everything you do for me. If you have any ideas on what it is you can help me out with the course, as far as maybe on things that I should talk about or focus in on, I could appreciate it. I would like to take all the insight I can into something like that, because I really believe that that's probably the way I should go with this channel. All right. Love you guys. Uneducated Economist, you let me know.